Good morning. Welcome to Broadband Breakfast Live Online for Wednesday, June 10th, 2020. We are here today at another episode of our discussion about digital infrastructure investment. Very excited for the discussion we're going to have. I thought last week's couldn't be topped, but I think today's will. As a reminder, we started this event 3 months ago when this series, this Broadband Breakfast Live Online, 3 months ago when the coronavirus was impacting all manner of communications and interaction, and we said, well, what role can broadband play in this process? And that's where we came together and we said, this is really a key to connectivity, to making sure people have the ability to find solutions to the challenges of the coronavirus. And we are here now, although we're not talking actively every day or every week about coronavirus-related topics, that really does impact the tenor of discussions. And in fact, today we're going to be talking our second of 4 topics focused on digital infrastructure investment. Very, very excited to have a great group of panelists to be on our discussion. I'm going to go ahead and just introduce extremely quickly all of our panelists, and then I will say another few words before we move on to the presentations and the discussions that we're going to have today. As I mentioned at the top of this program, we've been talking about digital infrastructure investment in preparation for August 10th, which is the date of our physical virtual event that Broadband Breakfast is putting on at the Broadband Community Summit on the future of digital infrastructure investment. And we're going to be talking through an array of topics: last mile digital infrastructure, infrastructure investment funds, federal funds and opportunity zones, and the neutral host infrastructure. And one of our featured keynotes for that event on August 10th will be Greg Mesch, who's right here with us, founder and CEO of Cityfibre, which I understand to be the second largest fiber provider in the United Kingdom. He is a key leader in the wholesale space and can speak from the global perspective. We've been writing you, the US way behind on matters of digital infrastructure investment because we haven't been as eager to embrace some of the trends we're seeing in the United Kingdom and elsewhere. Greg, we're very happy, has joined us here today. I'm going to just in a moment turn to him to give a little perspective on Cityfibre, almost a preview, if you will, for his August 10th keynote remarks. And following Greg, we'll have three other exceptionally qualified individuals to speak to our topic today, which is infrastructure investment funds. So with that, let me go ahead and turn to you, Greg. Thank you so much again for being with us today and for speaking, giving of your time, both for next 2 months from now, August 10th, but also today. So tell us a little bit about where you are, Greg, and about Cityfibre.
Well, thank you, Drew. Well, I'm in London, England, and live here, and currently the CEO of Cityfibre. I was the founder along with quite a small group, but we were an acquisition vehicle, so we were picking up distressed fiber assets starting in 2009. But Cityfibre's been in business since January 11th, 2011. So we've just passed our 9th year since Cityfibre was founded. It was founded on a set of acquisitions that were all of fiber providers across the UK that had struggled coming out of the dot-com phase, and they were pieces of assets and duct and infrastructure throughout the secondary cities. And we've grown from a small group of people to, we just passed 1,000 employees this last week. We are funded and owned by Goldman Sachs Infrastructure Partners and Anton Infrastructure Partners. They took us private with a £500 million acquisition about 2 years ago this July, so just coming up on 2 years. And they've underwritten a £2.5 billion investment program across the UK, which is to cover 5 million premises, 66 cities, and 5 million homes. Yeah, 5 million premises. Those are homes and businesses, 66 cities, and 2.5 billion. But we've just completed another acquisition of our closest competitor, which he was aiming at 3 million premises across the UK. So combined now, we've raised our ambition to 8 million premises across roughly 100 towns and cities. And that would be approximately 30% of the UK. And that's for full fiber rollouts, addressing what we call the four major verticals, which would be the public sector, so schools, hospitals, CCTV, as well as traffic lights, smart city applications, everything in public sector, as well as mobile. So we design and build the infrastructure for the large macro sites for 2G and 3G, as well as small cell for 5G. And then as we build, we drop infrastructure capacity for the business market. And then we build it all in a well-planned city model so that we also do consumer fiber to the home rollout. So we've kind of perfected a new reference design model that allows us to pick up all the different market sectors all on one fiber plant and sharing one access layer, which is, we've picked a software-defined GPON, XGPON layer with Calyx. So we're trying to lead the wave in one standard fiber plant across the city, serving for the markets, but those 4 markets equate to almost all the users of fiber. And then one access layer, so not different access layers, one access layers. So we've come quite a ways in the last 9 years, and feel like, we were alone in this space for about, I'd say, 5 to 7 years, where we were proponents of fiber should replace everything. Copper and fiber to the cabinet technologies are old, out of date, expensive, and not fit for purpose. That cable is a substitute for fiber to the cabinet. It's still not fit for purpose. It's expensive. It's power hungry, and it's really unreliable. And the only reason it exists is usually by the monopoly positions it gets in by franchises. But we believe fiber should transcend all that and almost be as a utility model. So we adopted that approach, and it really got momentum with the UK government, which really adopted with their Brexit strategy, saying, what would be one of the greatest powering forces or infrastructure plans that the country could get behind. And it wasn't putting more railroads in, and it wasn't putting more highways in, because those are the infrastructures of the old. It was putting a world-class digital infrastructure. So for the government to come to that conclusion, then they had to say, now how would we do that? And they started to say, well, we don't want to enter the private sector. We don't want to buy and nationalize a piece of BT, British Telecom, nationalize them and force it. So why don't we adopt competition? And so the regulator has really carved out a piece that allows Cityfibre type of companies to thrive. And the way that they've done that is they've been really kind of explicit on who builds fiber and where. There's no protection for cable. There's no protection for the incumbent. They control pricing so that they can't undercut our pricing. So we have a margin layer that we can do. And they've made it uncomfortable for service providers to sit on the old networks. So they've moved over to us. So some of the biggest service providers in the UK now have given us long-term anchor agreements. Mobile operators have shifted all of their backhaul traffic to us in mass. Whole cities have shifted their services to us in mass. So we think we've kind of led a reference design model and then a regulatory model that is maybe fit for purpose for all the Western countries to look at, which is how would you get a pure fiber provider going and get him in a state where he can really roll out at scale across the country. So that's just a little bit on Cityfibre.
Absolutely, that's great, and it truly is a model, an inspiration for others in the world, and that's why we're so happy you'll be able to speak to this at greater length at Digital Infrastructure Investment. You used the phrase, a single access layer or access layer. Speak to that. The term open access sometimes carries some implications that people import into that term, and when we speak about that, we're really talking about the wholesale model that you've pioneered. Could you just speak another minute or two about the providers, the service providers that make use of the services that you offer on Cityfibre, and maybe your partnership with some entities to get to these 5 million, and now you've upped your heights, more homes fiber to the home in the UK?
Well, first and foremost, I know the markets are all different all over the world. I'm originally from Colorado, and so I was involved in 2 communications companies. One was founded by a cable company, ATC. So I was familiar with that. That's what got me into this industry. And then when I went to Europe almost 23 years ago, 24 years ago now, I actually worked in Ireland, which had a different market, and lived and worked there and built up a pretty large fiber provider there that became the second phone operator. And then in Netherlands, Germany, and Belgium, I worked to build up a pretty large fiber operator there up to about 2002. Both of those became really the second infrastructure providers behind the PTTs. In the UK, their model, the way they deregulated back in the late 90s, was they set up an approach where BT, they were going to split out the infrastructure arm of the old monopoly provider, British Telecom, and they have a company called BT Openreach. And Openreach is the de facto monopoly across all of the UK, and then they have a cable company, and the cable company is only across 50%. So you only have 2 infrastructures across the UK, and it's a weak duopoly. So it's a monopoly provider from Openreach, and then a duopoly, or a partial duopoly with the Virgin Cable, or which is owned by Liberty, as the other half. Then you have big service providers. So all the mobile phone companies use those 2 service providers, and then all the big ISPs like Sky, TalkTalk, even Vodafone. Those are the 3 biggest consumer ISPs. They are all then trapped to using BT Openreach. So in the UK, we chose a model that was pure wholesale, because we knew that there was enough retail customers there that did not own any of their own infrastructure, and that if we could show them a scale operator like ourselves that could give them 10 times the speed at 50% of the cost, and we could get to scale, then they would move their traffic over. So we took an approach that may not be entirely workable in the US, but I think it could, because I've worked with Macquarie and a few of those to show how that model could work. But is that there's enough retail service providers today, they can't justify building this type of infrastructure on their own traffic load. So getting multiple service providers to each commit to you is amalgamating all the retail customers into a network build, but they don't know that they're doing it. So for instance, in the 66 cities we're currently rolled out across, one of the biggest mobile operators has given us all their backhaul traffic. Now we took that order, and that allows us to build the core infrastructure that is for fiber to the home, and they are paying for it. Now we don't get a great return on that, but then as we're doing that, we took an order from the cities to do their schools, their hospitals, their GP surgeries, all of those things. And that then incrementally helped us to refine that infrastructure. And then as you add on the businesses, you're now getting a denser network, and it allows us to offset almost 30% of the fiber to the home cost. And so then when the big fiber to the home service providers anchor us, we can offer that price lower, because it's not just them having to justify the whole build. So we chose a model that was pure wholesale, because the model over here could support that. And the key to that was continually showing them how we can scale it, and go from 1 city to 2 to 5 to 10 to 20, and now across 66 cities.
Absolutely. Boy, what a great laying the groundwork for our discussion today. And we invite you to stay on here. We're after hearing from Matteo, Chris, and Jase, we'll have a good and robust discussion about each of our particular thoughts and particularly bringing in this financial piece. So let's turn now to Matteo Andreoletti. Matteo is the head of infrastructure equity for Europe and North America for the Smart City Infrastructure Fund. Matteo, let me go ahead and turn it over to you.
Thank you, Drew. And let me, I don't know whether it would be possible to share the couple, there is a couple of slides.
Absolutely.
That can be used.
I'm turning to you right now and it should be shared. Can you see it?
Great, excellent. Yes, because I think it's worthwhile to introduce, first of all, what the Smart City Infrastructure Fund is. And thank you very much for having us here in this interesting discussion, which is in my view, is one of the hottest topics that the infrastructure financing sector is facing in a generation. The Smart City Infrastructure Fund, it's an initiative that has been backed by Europe's largest pension funds, which is the fund called APG. And just to give you an idea of the scale of the operation of APG, it's actually the pension delivery organization that caters for 1 in 5 citizens in the Netherlands, and it stands today with assets in excess of 500 billions. It's an entity that, as most of European investors, has embarked in sustainable financing and sustainable investing, and we've been working with them for a couple of years now to design what we call a financial product that will help entrepreneurs like Greg and everybody else to scale up their initiative in the digital space. So the ultimate objective of the fund itself is to promote the scaling up of smart city services. So we're really after providing enabling communication infrastructure that would allow ultimately to develop the IoT market. And why we do that is because we see the actual benefit of rolling out the solution in terms of tackling the global challenges that we all have around urbanization, climate change, sustainability, and technological advancement, which have only been accentuated by the current sanitary crisis. And I suspect there will be as well one of the key tools that will be available to policymakers and government to tackle as well the economic crisis that inevitably has drop off of COVID. So for exactly the same reason as Craig from Cityfibre have just outlined, as a fund, we have decided to focus on digital as a sector that requires investment, but didn't really have yet the exact funding in place. And the scale of the investment is just massive. So we've been working closely with the European Union and the program, the European Innovation Partnership for Smart City and Community. It's all member states in Europe have a slightly different, I guess, level of maturity and penetration rate. But overall, it's staggering how much Europe is lagging behind in terms of developing reliable communication infrastructure. And the same applies at different degrees all over the world. And we have, as a matter of fact, as well backed a company which operates in a similar business model as Cityfibre in the US. It's called Sci-Fi Networks, and we'll tell you a little bit more in a minute. So if we move to the next slide, Drew, I don't have the control, but just to frame as well what the fund's priority are. Despite being interested in being an accelerator, an incubator for IoT solution, being a pension funds mean that we do focus on the long-term investment, the asset-heavy side of the value chain. That means that communication infrastructure is actually at the heart of our investment mandate. And when we started this journey 2 years ago, we went straight into what is commonly known as use cases application, whether it is in the energy sectors or in mobility, on safety, and try to work with companies who had developed very clever solutions that definitely had make sense from a business model point of view, But we realized that what is really was holding back was the lack of ubiquitous and non-discriminatory connectivity alongside the community to be able to scale up those applications. So very quickly, we shift focus, at least in this first part of the investment program, to finance telecommunication infrastructure, whether it's fixed wireless. We think that the solution will need to actually have a combination of those technology. But the number one criteria that we use is to promote the open access wholesale model, which we see, and we completely share Greg's view around the virtue of this model and the ability of deploying this model at scale to provide reliable connectivity to a higher number of cities. Nevertheless, the business model on which we fund is not only linked to networks. We do as well invest in other sectors, and again, resource efficiency, whether it's managing water or sort of energy. It has been proven as a valuable tool. We do active in social infrastructure and, of course, in data analytics. But just to give you an idea of how this works in practice, I want to spend a couple of minutes on one of our portfolio company, which is Sci-Fi Networks. So what you'll see at Sci-Fi Networks is a dark fiber network operator, developer, and operator. We backed the company about a year ago with an initial target of $1 billion US investment program across the 20 cities in the US. And we literally recently upsized our commitment by 3. So as of today, it's around 60 cities for about 3 billion capex. The numbers are very close to I guess what has been described by Cityfibre in the UK. But what we really liked about the business model was their intention to provide a service to tier 2 and tier 3 cities, so mid-sized cities that are often neglected, or they are not able to access the right level of financing and capability. And we do that with a very long-term investment horizon. And as a matter of fact, that has been the feature that has allowed us to invest in those networks, which otherwise could not have been built by using traditional capital, whether it was on the private market or on the public market. The fiber network, as has been already mentioned in this session, is just an enabler for other services, and definitely from the outset we are integrating all the layers of municipal uses and a smart city application that we leverage on the network itself. Talking about wholesale open access models, I mean, these networks are underpinned by ISPs, independent third party that come to a network in a seamless way, and they can manage their client base on a cost-effective manner. The other example I would like to talk about in this introduction is what we're doing as well at the crossroad of wireless infrastructure and energy efficiency, energy savings. So the Innovalux joint ventures refer to an initiative that is particularly appreciated in Mediterranean countries around Europe, where we're using street furnitures and more in particular starting from lamppost to deploy wireless connectivity, which is as well some element of high power and sort of fiber component, but mostly it's wireless, to enable a mesh network in municipality, and deploying at the start basic service. Again, it goes to environmental monitoring, safety preventions, video surveillance, all the way down to a more complicated mobility management services, and do that really in smaller municipality. By backing the Innovalux joint venture, we really went one notch down. And just to give you an idea of where this technology and project being rolled to, we can actually hit settlement community that have less than 10,000 people. And just to give you an idea, in a country like Italy, which is my home countries, I mean, about 80%, 85% of the municipality have less than 20,000 people. So it's a vast segment of the market, which needs to get it right. It's a matter as well of avoiding a major digital divide. but also it's a way to stimulate economic growth, because better connectivity drive businesses and preserve the competitiveness of these territories who are beautiful, but they need connectivity to thrive.
Well,
So
thank you, Matteo. Wonderful introduction for the discussion about a smart city infrastructure fund. Let's turn and make sure to get some quick thoughts, preliminary thoughts from Chris Perlitz and Jase Wilson, and then we'll have a good discussion together. So let me go ahead and turn to you now, Chris. If you'd be good enough, I don't think I've introduced your official affiliation. You're the managing director of Municipal Capital Markets Group. So please feel free to go ahead and tell us some of your thoughts on this subject, Chris. And looks like the mute button needs to get pushed by you here. There we go. All right. There we go. Great.
So real quick, a background on Municipal Capital Markets Group. We've been around since '89. We're a bond underwriter. We do a lot of non-rated high yield bond work. I actually came from the tech industry, had worked on one of the very first wireless voice over IP systems, pre-802.11 tech, junk band type of tech, and then worked on some of the first IPTV networks on broadband around with EchoStar, Charlie Ergen, and helped develop their business group, or their broadband group there. It was about over 10 years ago. And so as a firm, we're able to raise the capital much like you would through an equity means, but we're doing it in the debt markets as we have access to capital markets. A unique element here is that I have direct communication with the going away accounts like a BlackRock or a Goldman as far as the buyers go. So we don't have this sort of wall that you might have in your traditional investment bank here in the U.S. But one of the successes, a couple of successes we've been having is being able to raise capital purely off of the revenues off the system, where a lot of the traditional lenders out there are leaning on electric utility revenues or some sort of tax base or a tax increment, like you see in Utopia and some other ones. Those are generally easier to get to the market. But what makes it work for us is really understanding the space, right? Having come from this space, really understanding sort of what the business model looks like, what your churn rates are, and getting dirty into the model. That's been one of the critical successes behind what's made us work in this space. I think in the U.S. it's definitely a different tapestry of issues we have, right? We're not regulated very well at the national level. The FCC has been pushing specific types of stimulus programs, which may or may not be advantageous for what we're trying to accomplish in connecting the last mile here. Heck, I'm a mile from the Cable Mansion and Cable Museum here in Denver, and I only have one service provider that's viable. And so it tells you a little bit about that there's a need for it. But one of the problems we have is that it's hard to raise capital in the U.S. here with equity when your margins are tight. And generally, as you all know, in the finance space, the margins are very tight. So you have to do this a certain way, and you have to do it sort of methodically based on growth and penetration rates and so forth. So that's one of the focuses we have, is just sort of doing this organically, raising the capital, for our clients slowly, and doing it through a long-term plan.
Chris, let me ask you a question that hopefully can springboard to a little further discussion. We've heard from two Europeans, or at least European operators, although Matteo's has one U.S. based model, but kind of with your U.S. based, and you've obviously been familiar with some of the U.S. successes in wholesale open access, such as Utopia and others. Could you just speak to some of the peculiar or maybe distinctive needs that U.S. investors need to be focused on, or some of the lessons they could take in thinking about the next generation of digital infrastructure here, Chris?
I think I believe it was, who was the gentleman? Greg, you mentioned basically building middle mile infrastructure, and then having a wireless adoption that would follow on top of that. We have a similar model here in the US, what we call DAS networks, which are basically, universities have been adopting them, and it's sort of you have a centralized NOC, and then you have access points around the campus, and then you lease out rights. And I've done some of the modeling around that. You're looking, each service provider, which decision making is on a local P&L level for those service providers, is driven by about $1,500 to $2,000 per drop. So yeah, the economics, it's about 1.5 service providers or so that connects into the network will justify the cost of the infrastructure, right? So there is something there. I think from the evolution of this space, I think we're going to see more more wireless deployments for smart city apps. But I think that the struggle we have is that the FCC has been sort of stifling our ability, and rather stifling the local government's ability to make proper decisions. And then there's been a lot of smoke and mirrors in the market, right? Generally not really being clear as a path of how to go about this. You're lucky in the UK that your regulatory market is a little bit more is stronger than we have here in the US. In other words, they have more control, less capitalistic in some levels, I think. So there is some mixed information that flows down through the ranks to these smaller mid-sized communities. And we also have a pretty strong lobbying control from a telecom and cable standpoint, more so on the local level than on a national level. But one of the things that's that I think is going to evolve over time, and I went into this space specifically on the utility side to capitalize that. What we've done as a company, we've done a little over $15 billion in utility infrastructure as an FA in the last couple of years, and those are mostly on electric and natural gas distribution. But the notion is that eventually this is going to be a utility. I think Matteo had said that. So if you look at it from a financing standpoint, think about the utility, but think about it being a startup utility, right? Instead of an existing ongoing credit that might be, because it's hard for issuers that have an existing credit rating to make the shift. And I'm not talking about co-ops, I'm talking about your other traditional sort of utilities, to make the shift of taking on the risk of a broadband network. And some of that's the discussion where equity might come in, but the problem with equity is that your returns are usually higher. So it's harder to achieve those margins. Well, did I help explain it there, Drew?
That absolutely does. And we're going to open this up shortly here. We just want to make sure we get in all of our panelists here. And so go ahead and thank you very much. I can go ahead and mute and unmute you, Chris, there. Let's turn finally now to Jase Wilson. Jase is the founder and vice president of growth for Ready.net. Jase, tell us a little bit about Ready.net and some of your takes on this issue here of the infrastructure investment funds marketplace.
Well, thank you for having me, Drew. And I'm really sorry that I'll have to hop in a few minutes. We had a customer waiting on me, but it's an honor to get to sit with this squad and talk about this issue. That's the forefront issue for the United States. I'm thankful that we're able to learn from our European counterparts who are leading the charge over there. I'm also the odd person out here and have a contrarian view probably compared to what's been said so far in some respects, but I'll do my best here in the few minutes that I have. I'm Jase. I'm founder of Ready.net and the CEO. I gave myself a promotion the other day. So we make software tools for America's thousands of local internet service providers, right? We're building tools that help our customers acquire and retain and monetize subscribers. And, that's a very different angle and point of view than building infrastructure and they will come. I think it's highly complementary in the end. And we have at Ready a team of 8, a long-term high hopes about the future of open access in the United States. And we're very hopeful to see everyone here make progress on that front. But we also see local internet service providers and many folks that are surprised to learn that there are nearly 3,000 of them operating in the United States that together connect over 40 million households to the internet today. are a really interesting, fascinating group of change makers. And we see them as a driving force to help solve the digital divide, especially now in the COVID era where remote services became front and center as, you know, essential to daily life. And we talk about the fact that, you know, no human being needs the internet, right? What they actually need is the connection to each other, to the economy, and to remote services. And a big focus of Ready.net, the stuff that we make for our customers, the local internet service providers who are working to grow their business, focuses on getting access to remote services that they can cross-sell, especially network-dependent remote services that they can, you know, create and capture some of the value from the connection that they're creating, you know, enhancing the returns to investors. You know, and we work in a market right now in the US where the 5 largest internet incumbents are worth a combined $500 billion. And there are thousands of local ISPs, and yet tens of millions of Americans still can't get basic broadband, right? 25/3, which is an embarrassingly low target. You know, so we're helping local ISPs who are fighting to get folks connected, who are battling things like double-digit monthly accounts aging problems right now as people can't pay their bills because of COVID. We're helping them to make sure that people get access and that other types of service provider via the local service provider can get access to route their services. So that's us in a nutshell. And I'm, again, very thankful to be a part of this conversation. And I have a few more minutes, but I'm really sorry for the mix-up. I didn't get a calendar invite.
Jase, let me go ahead and ask a follow-up question or two here. So you started off saying you wanted to take a contrarian view, but perhaps I haven't been listening carefully enough. What is your contrarian view to what Greg and Matteo and Chris have said?
I don't want to take a contrarian view, and I'm a huge believer in everything that's been said so far. I can't believe you assembled this squad, and I can't believe that you invited the weakest link to talk with this squad. Like, this group could be like a world panel on how to get internet done for people. But in this case, it's not that I want to. It's that open access in the United States, it's good to hear that, you know, Matteo, you're funding Sci-Fi to get to 60 cities. And long-term, we think that open access ultimately will become the dominant model. But we're very keen on why it hasn't been adopted yet. And Chris spoke to this a little bit about the fact that, you know, there's a legacy, a history here, right? I mean, for the most part, the internet was born in the United States. The first connection, UCLA to Stanford, you know, using some technologies that were incorporated from UK engineers, but that was over a copper line, and thus began, right, the legacy of what's now the copper oligopoly, and this like too big to fail oligopoly of really shitty copper-based providers that have not only a stranglehold on the existing information infrastructure of the United States and fight really dirty behind the scenes to make sure that that stays in place. They also have billions and billions of dollars from the federal government to do things like suppress the local internet service providers who are the kinds that go out and fiberize. You know, the ones that Greg was lucky to start with acquiring in the UK that have a really hard time, you know, doing their thing and growing their business in the United States because of that dynamic. So no intention for a contrarian view. It's just that when we talk about Ready on panels where the dominant focal point is like a view of open access as a build it and they will come model, and we talk about helping local ISPs, we just have to make sure that we separate the fact that, you know, the local internet service provider that's this mom and pop shop or a community, you know, like a local government or an REC, as Chris had mentioned, or a broadband utility at the local level that's getting together to connect folks, can and should be separated from the incumbent copper oligopoly that's, you know, they're just ISPs by luck, by being in the right place at the right time, by having the telephone and cable lines. So
absolutely.
That's all. It's, you know, we don't work for the incumbents in the copper oligopoly. We work for scrappy local internet service providers who can and want to grow.
Great. And one of the things we're all about at Broadband Breakfast is sort of covering the landscape. We're about better broadband, better lives, how to get that higher capacity broadband. And what's so exciting is to see that great progress that has happened in fiber to the home deployments that Greg's been involved in, and Matteo, you've been involved in, and all of us. Jase, I want to be respectful. I know it sounds like you have to go.
I got 5 more minutes.
Oh,
Good.
excellent. Well, then, if you don't mind, let me just keep you on while we turn to Matteo, because I want to ask Matteo a question. And I'm going to frame this by saying one of the things we've been talking about at Broadband Breakfast and will be a key focus of digital infrastructure investment on August 10 is that we don't need to have the vertically integrated model. Now, I'm not saying that's bad or it's terrible or should never be anywhere, but there is a logic to a dividing of the ownership, the operating, and the services on the network, right? And that's what we talked about last week when we talked about some last mile deployments. And what I want to turn to Matteo, your slides highlighted this 15 to 20 year time frame. So could you just speak to that 15 to 20 year time frame for investment and how your piece of it, because Smart City Infrastructure Fund, as I understand it, is the owner of the assets in, for example, the Fullerton model in that Sci-Fi is doing. You're the owner of those assets. Sci-Fi is the operator, and then they have multiple service providers on that. So, Matteo, could you just speak to that time frame for investment and how that might play into this landscape?
Absolutely true. And I mean, first of all, I think that time frame is required. I mean, as Chris has outlined, this when I was referring to fiber becoming a next type of utility, I couldn't agree more what Chris said about it is actually a startup utility. So when we start looking at this this type of infrastructure, and you've seen in Europe, you already seen, I guess, cable or early fiber infrastructure privately financed. I come from the city of Milan, where there's a company called MetroWeb, was done by Fastweb, and it was one of the, I think, early success of a citywide deployment that was done on the base of sort of like open access in infrastructure. I mean, I think it is required to have the long term because otherwise you cannot break the triangulate the required rate of return on investors, the capacity and the margin of the project to repay investors, and the underlying market that is still an early age and requires some time to ramp up. So the typical model, where you have a private equity firm making a 3 to 5 years bet with in the hope to multiply his money at exit, in my view, it's not really appropriate for fiber. It might be appropriate for some element of the fiber, but if you think about the potential of the fiber, and coming back to what Jay said about what the legacy copper company have done to the market by holding it back, I wouldn't want to be the person who holds back the potential of fiber in 10, 15, 20 years. And that's why we structure a product very long that deliberately was not putting pressure of the project to deliver profitability in year 5, 6, 7, which is the typical horizon that you might see it. And because I see the broadband connectivity as only one piece of the puzzle. I mean, I'm deeply convinced that the fiber will be a network, right? It will be a high power application with running on fiber. You will have some sort of like a low power network, LoRa or Sigfox, or you name it, what standard,
right,
to drive IoT. You will have connected cars. And as Jay said, you will have people relying on those services. And I think the long-term horizon is required to make sure that we develop something that will not become overly protective, and it will be open to drive and accept adoption for the years to come, because we're just at the start of this learning curve.
Greg, can we get your perspective on that time frame and how that helps to set the expectations properly for a fiber build? And do unmute yourself there.
Sorry, I didn't know control that. Well, we completely agree with that. Both of those, by the way. So we avoided the private equity route, although the last companies that I was involved with was all private equity financed. I had term sheets from Advent and Soros when we were getting started during the acquisition phase. I chose to pass on those. I actually did something crazier, which is I took it public on the AIM marketplace, which is equivalent to NASDAQ, I suspect, a lot smaller, but it's the London Stock Exchange. We did end up raising over 300 million pounds of equity, which is close to $500 million in dollars. And we did it through 16 million raise, the 30 million raise, an 80 million raise, and then a 200 million raise, and then we did a pretty substantial debt facility that was also really long-term infrastructure rates. Because I knew that the dilemma of a private equity looking at a 3 to 5 year window was never going to work. And in a certain sense, the public market was too stupid to understand that we are a 5 to 10 year play. So they were in and they kept raising money because they liked the space. But I kept needing more capital. At a certain point, it didn't make sense to stay on the public market. So we helped to organize a take private with Goldman. But those are do not confuse those with private equity. They are both infrastructure funds. They have time frames for liquidating of between 10 and 15 years. So they have no requirements to liquidate anytime under 15 in both those. So they could be holding positions in our company for up to 15 years. Now, if they exit in 5, they'd be happy as heck. If they exit in 3, they'd be happy as heck, because they are fundamentally developmental infrastructure companies, but they're not private equity. So their windows are longer and their threshold return rates are in the 6 and 8% or 8%ish, and our management equity incentive plans are, in the 10% ranges, versus a private equity firm's management incentive hurdle rates don't kick in until they hit 12 and 14 and sometimes 16%. So we orchestrated a take private off of the public markets onto the private markets, but it was only with what I call developmental infrastructure funds, that only in the last, I'd say 4 or 5 years, they were allowed to participate in fiber. So up to that point, fiber was not an investable class for Anton or Goldman's infrastructure fund, because it was class telecoms. But they made some changes in that 5 year window, and that's why all this money has started to move into this space, is the infrastructure. Now, the COVID crisis is going to make it even more available from what we're seeing already. So I thought there'd be a maybe a severe drought of capital, because I was in the .com phase and I was in the 2008 phase, and both of those hit the infrastructure builders really bad. But it looks like just in the last 8 weeks, there's been 2 deals that got funded here in Europe already. And so the money is circling quicker back to this area even faster, because an infrastructure fund, why would you put it in a railroad, or why would you put it in an airline today? Which is the typical infrastructure fund was financing literally an airport and runway. They were financing rail lines that are, nobody's in the rail lines now, and certainly cruise lines and ports and harbors. All of those have been decimated for this, and they won't.
Very good point.
Tons of money is rotating back into fiber as a core class of infrastructure. So I think it'll unleash a tremendous amount of opportunity over the next few years.
I definitely want to get Jase and Chris your take on what we've just talked about here. Jase, do you have anything you'd want to say on this? And please unmute yourself.
America needs to listen to these guys. And move quickly.
I had to move America to find capitalism.
And we need to look at what those other remote services that provide value to folks. No one needs the internet. They need the remote services and the connectivity to each other. We need to look at ways of capturing value from the remote services that are most needed. So at Ready.net, one of the first cross sells that we started with, there were the low hanging fruits of VoIP and entertainment, which are pretty common table stakes for all the bundlers, that are operating, is telehealth, right? And to Greg's point of, there's more available. Broadband is one of the weird winners in the post-COVID economy as the essential foundation for pretty much everything moving forward. And now that we're, spending over $1 trillion a year as a country on healthcare, and, we can't put people in hospitals, and if people go to hospitals, they have a high risk of getting infection, and yet there are, hundreds and hundreds of telehealth capable, public health and health institutions in the United States, but the people that don't have access to the internet, strong enough connection, aren't able to do it, right, and participate in it. But if they have, a local ISP that's able to capture a percentage of what the insurance company covers, and that's a trade that the insurance company gladly makes, they'd rather spend an order of magnitude less and pay a couple $100 a month on a strong premium connection that's capable of delivering telehealth than keep somebody in the hospital for a growing variety of things. That's something that we really hope that, we think about as a country.
Excellent.
I'm sorry, this customer, but it was really cool hanging out with you guys.
Well, we'll look forward to August 10th, and we want to continue this discussion for 10 more minutes here until the top of the hour. Chris, you were nodding extensively during Matteo and Greg's remarks there. Could you just speak to this point that they've made about the time frame?
Yeah, so on the debt we've been raising, which there's a couple levels of debt, right? On one of them, we use, you guys aren't U.S. investors, I don't think, but 80+% of the investors invest in tax exempt investments because of the tax benefit, are high net worth individuals, right? So they're very patient as far as the investment, and you see how we're investing in a lot of these is 30-year debt, fixed rates, so they have to be patient to sit and wait for that long for the returns, and the returns are roughly around between 4.5% and 5.5%. There is another component of that, and that's the lion's share of the CapEx for the infrastructures using that. But the original capital going into it is, we've been raising it as tax exempt subordinated debt, which has a yield of 8-10%. Taxable equivalent for the investor, 15 plus. But that's a zero coupon, subordinated piece of debt, and it's expensive. So your horizon has to be long, right, to recoup your investment. And think of it as you're offsetting your risk to the investor in this case versus an equity investor, is taking collateral more readily. And so there's, for us, the horizon's important. Your traditional PE, like you mentioned, Greg, is interested in a 5-year turnaround on you're leveraging up their equity, right? So you're not as patient. So to hear that you've got some investors that are willing to wait 15 years plus is really a nice thing, because you need that to make these things work. The other thing on telemedicine is I do some policy work around the USDA programs, and I've been working with a couple healthcare organizations that are starting to have on telemedicine reimbursements for the first time. So the COVID issue has now required the feds to relax its rules and starting to provide reimbursement for Medicaid, Medicare for telemedicine services, which is a big trigger. The next trigger may be what Jase said, going down the path of being able to subsidize the maybe residential access. I'm not sure if there's some basis to that, but that would be nice. Sort of like E-rate maybe on a healthcare basis, but I haven't heard anything about that yet. But yeah,
there's certainly been ideas. In fact, on a previous Broadband Breakfast Live Online, that discussion of using stimulus funds to subsidize 2 or more months of connectivity was raised. Next week, and of course on August 10th, we'll be talking about some U.S. focused government options through Rural Digital Opportunity Fund, through Opportunity Zones, perhaps through other vehicles as well. And yes, I mean, perhaps kind of the drawback is we don't have a regulator the way Ofcom, which says, hey, we really want to support this environment of a competitor to OpenReach, and that's kind of helped the model. But it hasn't been the only thing, obviously, that's been key to Cityfibre's success. You've kind of been able to both find those anchor institutions and it sounds like really gain traction on fiber to the home deployment. Perhaps for a few minutes, we could speak a little bit about some of these smart city applications, whether it's kind of getting mobile providers on or other financing for smart city deployments. Matteo, you spoke quite a bit about this in your presentation. I'd also like Greg's take. Where is the revenue for smart city applications? I mean, you talk about a lot, but again, how does that matter and how does that pencil into the business model that you've built, Matteo? And Greg, like your thoughts on that too.
Yeah, no, absolutely. I think I mean, most of these smart city applications today are not deployed at scale. I think there are some effective solution that has proof of concept or small deployment that has been done sometimes on a promotional basis or heavily subsidized by European funds, for instance, here in Europe. The monetization and sort of the scaling up, it comes, I mean, two things. One, it does require the network connectivity to be able to deliver those services at scale. And secondly, it requires as well a level of standardizations to drive the adoption on several projects, because not a single one, including London Underground today is tendering out sort of 4G networks and also the monetization of the street furniture all across London. That's quite a big multi-billion pounds schemes, hundreds of millions. But even that is not big enough to absorb sort of like the cost and investment if you want really to roll that out on a national basis. Mm-hmm. So the business model today primarily drive from, I think, visionary cities who are willing to underpin and seed the investment with their municipal use. And as an investor, we can take a view that, albeit maybe we don't recuperate all the capex from that seed investment, but that help us to finance the rest. And secondly is what I said, anchoring towards what we call enabling business model. I take an example. In smart mobility as well, linked to car park operation, for instance, there is actually quite a lot of revenue that can be generated if you can turn around your car park, your assets in a much more quicker and better way. There is a way of monetization as well of environmental friendly initiatives, whether it's lowering energy consumption, so lower dark energy, or it is about the street lighting, for instance, where you can have efficiency savings all the way up to 70-80% just by transitioning to connected LED technology. So it's a matter of finding those small niche that allows you to replicate.
Sure. Greg, do you have any thoughts on that, and also any final thoughts, again, before we kind of conclude today and await you to come back on August 10th as a featured keynote? So Greg, go ahead.
Well, it's just good to hear a lot of the U.S. perspective, but we feel that we look at smart cities as more of a thematic theme, which is for the city to go carbon neutral, he should reduce the amount of electrification in his city. So we play with fiber completely passive, so we can eliminate the truck rolls of copper and cable. So you start with a modern city infrastructure needs to be as carbon neutral and green as it can be, and that's fiber. Fiber will end up becoming the dominant infrastructure, and you can then shut down the others. Now, they don't like to hear that talk, of course, the cable companies and the copper, but that is a fact. So once fiber gets dominant, it will suppress the rest, and they will die off, and they will either convert into fiber plants themselves or they will go away. The city then is left with a ubiquitous infrastructure based on light that doesn't require cars that drive around and fix it, and it doesn't require power. We start with that. In dragging around the power cost to power a cable and a copper network in a medium-sized city over the life of 10 years will almost pay for your infrastructure investment of fiber. And they just don't want to talk about that. So that begins there. Then we look at smart applications for the city and say, well, all of your CCTV, which every city now needs CCTV, facial recognition, they need to have those things. That's only facial recognition, high definition is only done with fiber. Then the traffic lights are just added on. So we get traffic lights. Now they're starting to do what we call health monitoring of their facilities, whether they're healthcare homes or whether they're council flats provided, community housing. They want to measure temperature and temperature leakage of windows. So they're attaching monitors onto these buildings. And because we have fiber, we give them free passage. So we are enabling these small trickle amounts of capacity, like home monitoring of your electricity, or home monitoring of something else, some gas. And they really need trickle amounts of data, but they need it ubiquitous and all the time, so to speak. And we give them free access basically to ride on that. So what we do is, a lot of smart application providers come to us and we say, I tell you what, we'll give you free access to ride on the bandwidth for a while, because they can plug into the software defined access layers now with really easy, right? We can just allow them to plug in on a port, and we can control that. And then we allow many applications to run that the city gets benefit. So we're not making the home metering application pay for anything, other than it becomes essential that they get fiber because they want the metering, they want the home monitoring. And we're now beginning to do some pretty serious pilots with GP surgeries, because as your last speaker who left, you said, he's absolutely right. Who wants to go to a hospital today? And if you could do really good video, two-way video now, you'd keep your mother at home and let her talk to a doctor versus going in to see a hospital.
The struggle that I've seen is trying to get the cities to understand the tangible value, not your soft value, but your tangible value in offsetting operating costs from other departments, right? So moving over, we're building a network in a city, 60,000 homes, and we're offsetting a substantial amount of operating expenses from the other departments and consolidating them into a new enterprise.
Yeah.
And so there's this challenge of, they have to, this enterprise has to go out and tell, okay, police department, we're going to offset your costs this way, and embed that into the model. And then, like you said, it compresses the return on investment pretty fast, but it's hard to get them to get their head around it, because on accounting for those values is hard to do for them.
Yeah, it is. Where we do start, though, we start with and this has been Cityfibre, and that's why hence our name, is we went after a little bit model, is we went after it at city level. And what we begin with is a modern world-class digital infrastructure is what your city needs. And that has to be pure fiber. And if you do it, you will increase the GDP growth in your city by 1 to 2% a year for the next decade and beyond.
Yeah.
That then equates. So what we do is we take a small city like Leicester or Derby or any of these, Sheffield, you've heard, Manchester, which is a little bigger. We calculate their GVP. We figured 3-year build cycle. And then we look at the increase in GVA or GDP, they call it GVA over here, increase of that per year of 1 to 2% for the next decade after finish. And then we take the number of jobs they have and the number of businesses, and we divide it into their existing GVA. We come up with a calculator of how many new jobs and new business starts they get. So we come at it from, look, you, Mr. CEO or mayor or whoever, you, a world-class digital infrastructure is what you want. Yes. Okay. We're here to deliver you one, and the benefits are 1 to 2%. Why? Well, because we're the competitor. What we're going to do, if you allow us to do this, is we're going to radically change the price structure. So we're going to give 10 times more for less. That will make the other service providers reduce their costs and increase their services. The net effect will be an acceleration of your goods and services. Has to be. So if I can reduce my internet price and get 10 times more, then maybe I can hire an extra worker. You would apply that to 10,000 companies, you have 10,000 jobs, right? In theory, that works. The economists have gone through our models 3 or 4 times and nobody disputes it. Okay, we get it. You have a world-class digital infrastructure that should accelerate your economy. So we come at the CEO level from, we can help you put a world-class digital infrastructure in, and you need to help us every way you can, because as quickly as we can get it done, we will add job growth and add business starts to your city. Now, then you get all these residual benefits: a green, smart, multiple applications, competitive infrastructure for the next 100 years.
Well, this has been thank you, Greg. Thank you, Matteo. Thank you, Chris Perlitz. Thank you also to Jase Wilson. This has been a remarkable discussion around infrastructure investment and the role that it can play. We're very much looking forward to Greg Mesch, CEO of Cityfibre, who will be back with us on August 10th at Digital Infrastructure Investment, 1 p.m. Eastern Time to 7 p.m. Eastern Time. I thank you for being with us during this hour. And we will see you next week at 12 noon Eastern Time. Take care.
Good luck.
Thank you. You too.
Thank you.